Okay, welcome everyone. One of my favourite sessions of the month is when we get the opportunity to do an Accelerate session. This is where we interview a gym owner. We look at things that have contributed to their success. Today, guys, I want to introduce you to Michelle Manion. Welcome, Michelle.
Thank you.
Michelle, you're based down in Victoria. We had the opportunity to work together a couple of years ago now. Tell us a little bit about your gyms first. What's the brand called? Who do you serve?
Yeah, so our studios are called Fitness Health Club. We're a women's fitness studio, and we serve women, but the purpose is to, I guess, provide a little bit more of like a supportive, welcoming, positive space for them to come and train. There's so much information out there now around the importance of strength training for women, but what we've found is not a lot of them currently align with a lot of those big gyms out there and things like that. So just providing an alternative space for them to come and get a really good workout, but just in a culture that aligns a bit more with them.
Very good. Obviously, you've gone for a point of difference with the delivery of that sort of fitness model where you're just focused on women. I know like Dev from Empower Women's Fitness you've met, he's the same. How do you find that sort of specialization? Have you found that to be challenging to just focus on women, or have you found it to be a bit of an advantage in some way?
Yeah, I reckon it's a huge advantage because you're speaking to a demographic that's what they want. I would say 80 to 90% of people who come in, like the first thing they say is that's what attracted them to the studio, is that it's a women's only facility, whether they've had like a bad experience somewhere else or if they just feel really intimidated to go into like a co-ed sort of environment. It's something that would attract 80 to 90% of our members to us, I reckon.
Yeah, that's interesting because obviously you sort of cut off half of the market and you potentially have half the number of prospects that you can invite in, but it's almost counterintuitive where because your ads have women in them and it's a special offer targeting maybe parents or challenges that women have around storing body fat or menopause or something like that. It's interesting and hopefully gives everyone a little bit of motivation or direction around if you are writing an ad, if you do want women to come in, specialize in the same way like Michelle is, where you just have a specific campaign for a specific person. So good. And so you, when we were working together, you had the Balaclava gym, and I understand you've sort of opened up another gym there in Melbourne. Tell me what was some stuff we were able to do perhaps together in Gym Hub, things that you were able to sort of put in place to give you the confidence to go, you know what, let's do it again and do another gym.
Yeah, absolutely. I think when I came to Gym Hub, I was a personal trainer working, 60 hours in my gym, and I had some staff that was just kind of fumbling along that business perspective, and Gym Hub really drilled into me the importance of systems and having systems in place for everything. And you guys had templates. You were able to not just tell me the system, but I think really walk through how to set it up. So I guess some examples of that, one of my biggest and a really simple one, but you provided me with a price rise letter because our prices were way too low. And I was so nervous about increasing those prices. And yourself or John jumped on a call with me and we drafted out a price rise letter, and I put it out and we didn't get one cancellation from it. I've now doubled my prices, and I reckon we've had like 2 people cancel in the last 5 years. So that letter was gold.
Oh, it's good. And I've had the same experience. We just did a price rise this year. We've done one every year except for, I think it was 2022. It was right in amongst the COVID stuff. But there's so many expenses. Like you're going to talk about expenses from your accounting sort of background as well today, but like wages are going up and rent's going up and insurance is going up, and it's scary, like putting the prices up. But Yeah, I'm glad to hear you've had a good experience doing it. And I imagine for your second gym, it's probably less daunting, is it, knowing that you don't actually need like 1,000 members to get break even? You can maybe have a smaller group and charge a little bit more.
Yeah, absolutely. And once that sort of you've done those price rises a couple of times and not seen a huge negative effect, you've got a fair bit of confidence around it. And it's definitely the less members you've got, the less admin, the less people you're managing, the less voices you're hearing. So it's definitely easier.
And look, I know you're an accountant. I know you're going to help us out today with some tips around like tax and different structures and things. But in order to have that space and the I guess the time to work in that space, do you have managers in the gym? How have you sort of set it up in a way just to have a little bit of choice for other projects?
Yeah, so we've got a manager at each studio, and that's another thing that Gym Hub helped me hugely with. You guys helped me, I guess, craft out what those roles looked like, and organize, like having meetings with the managers to make sure that they are doing the managing of the day-to-day operations, and I'm really just coming in and meeting with them for a couple of hours each week. We've crafted out a role where they do personal training part of the time and then manage the studio the other part of the time, which they love, like that balance. And then they run all the day-to-day operations, so member communications, staff one-on-one meetings, which we do every week. They do like handle all the sales inquiries. Just all the day-to-day things that need to be done in a gym.
Yeah, I follow those steps. Do, we, and you. I think sometimes we skip that order. I really believe that you going in and doing each of the roles yourself and being a big part of each of those roles at the start is important. The next part is kind of where you do it with the managers and you train them and you keep like support them and keep them accountable. And then that last step is you. It's like, hey, I'm doing accounting from home. I need you to perform that role. So part of it was getting all that IP out of your head. Do, we, you, and there's a process. Too often I see people either skip doing it themselves or before they actually do it with them. And in the we phase, they actually delegate and go, hey, you run my gym for me. And naturally things start to fall over because it wasn't easy for us. Why would it be sort of easy for them? Well done. Outside of the gym, I know you've got a young family. Tell us about your family, the age, and because that's obviously part of the juggling time and different roles.
Yeah, so I've got a little 2.5-year-old now, Alana. Had her in the middle of COVID, and at some point 1 year later decided why not open a second gym, which was fun. Balancing all of that now, which I really enjoy. Like, it gives me the best of both worlds. In terms of the gyms, I spend probably about 2 hours, 3 hours a week on each gym, meeting with the managers, just making sure that they've got everything under control, running through like the metrics of the studio, how everything's going. And I'm still involved in a little bit of the marketing with the studios as well. And then, spend the rest of my time with the accounting side as well.
It's good. It's definitely, you definitely have that ability to have realistic expectations of your managers. If you've, done some outreach with local businesses, or you've done a certain number of hours of one-on-ones and things, because you kind of know what to expect and what's realistic. I love the fact that I know the gyms are about 15 minutes apart, which seems like a nice sort of idea in terms of brand awareness, but also managing, like getting amongst them. And I think having those clear roles around what are their KPIs or what are their sort of goals for each week enables you to be really time effective. A couple of hours a week's pretty inspiring. So well done. Congratulations. Guys, if you have a question for Michelle, whether you're interested in opening another gym, or even if you're just interested in, is there a way I could be moving my 60 hours a week down to closer to what Michelle's doing to sort of manage her gym? Any questions for Michelle around processes or systems or staffing before we dive into a little bit of tips around like accounting? Michelle, while the guys are thinking of some questions, George has got a over 40s transformation center on the Gold Coast. So specifically choosing the over 40s market, which tends to be less cluttered, I've noticed. And yeah, they're actually franchising. We've got another George down in St Leonard's in Victoria. Chrissy Newell's in New Zealand. Her gym's called Bay City Gym. They've actually got a range of sort of traditional gym with a range of different services. Alec's got a personal training studio. You might have met Alec when you were here a couple of years ago as well. Guys, any questions, go into the chat and let me know. I can put your microphone on if it's easier. While you're sort of thinking of questions, why don't we change gears a little bit? Michelle, I want to pick your brain about your accounting sort of role. How is being an accountant and having your head around some of the sort of financials helping you to run these gyms?
Yeah. So I guess it gives me that back end business running side of running the gym as well. So not just the day-to-day operations, but understanding how to read your financials, your profit and loss, and what they should look like, and then making adjustments accordingly. And I just think there's so much information to know in that space, around payroll and what you're meant to be paying staff, or how to claim certain tax deductions and all that sort of thing. How to do your bookkeeping so it doesn't take too long. That definitely helps in the gym side as well.
Yeah, if you can charge $80 an hour, $100 an hour for personal training, it doesn't make sense to be sort of untrained and sort of frustrated doing your own bookkeeping. So I see a lot of leverage in the same way that you mightn't sort of pay to, clean your gym or do other sort of, or take all the classes inside of the gym. Are you able to start maybe giving us some practical tips around things that we could be claiming in the fitness industry to reduce our sort of tax bill at the end of each quarter?
Yeah, I guess, that's a really big one. People aren't sure what they can claim, what they can't claim. And there's definitely some funny ones that come to me. I think everyone on the gym floor nowadays is a tax specialist. So often clients will come to me and ask some pretty funny questions. So I can definitely run through some of the things you can't claim, and then, some of the really common ones. I might even share my screen, Steve, if that's all right. Yeah. I've got a document that I often give to clients around things that they can claim as a gym owner.
Perfect. And of course, if you want to share that document later, I can make it available to these guys after the call as well.
Yeah, cool. More than happy. Can you see that?
Yep, we're good.
Yeah, cool. So this is just a little sort of 3-page guide of things that people can, the gym owners specifically, can regularly sort of claim in the gym. Starts with advertising and marketing expenses. So anything you're spending on social media, flyers, website, all that sort of thing. I've got here actually a common one that people ask. Often they'll put signage on their car and think that their whole car is now tax deductible. I can go into that one if anyone wants in more detail, but it doesn't make their car tax deductible. There are other things, other tests that they have to meet before that happens. So that's caught out a couple of my clients in the past. They've gone ahead and bought a car thinking that it would be tax deductible if they sort of put a sticker on their windshield or something like that.
Just on that one, years ago, I was one of those guys with my first gym that did it. And it was actually pretty effective, to be honest. Like, it was a constant signage that was always in and around the suburb.
Yep.
I remember at the time creating like a bit of a diary demonstrating like a journal that I did actually drive to and from work, and it was used for work. Is that the type of rule still? Like, do you just have to demonstrate that it is being used for work?
Yeah, so if you were to have signage on it, for example, it could be 100% tax deductible if you just say parked it in a really busy car park and the goal was to get as many people as possible to see it, then the signage alone would make it tax deductible.
Yeah, wow.
But if you're using it to drive around for things like that, then the signage itself won't make it tax deductible. Then it's more based on where you're driving. So you've got to keep a 12-week logbook, and it's really simple. Like there's an app on an ATO app that you can use, and for 12 weeks, you basically log every trip and mark whether it's business or personal. Traveling from work to the gym is not considered business unless you're carrying like bulky equipment or something like that in the car.
From home to the gym.
From home to the gym. But if you're driving from like multiple gyms or from gym to the post office or to another client's house, if you're like a mobile trainer or something, then it starts to become a business trip. Yep. And then at the end of the 12 weeks, you work out your percentage. So what percentage was business, what was personal, and that's how much of your car you can claim.
Yeah, good. So like I'm only going into my gym Mondays and Thursdays, but obviously there's a chunk on those days that I can claim. I'm not 100% write-off. I don't have any signage at the moment, but I am definitely able to claim a percentage of my expenses, which is kind of cool. Can you just quickly like clarify, like what are we trying to do here? What's the idea of finding things like a car or a computer that we can sort of claim a tax benefit? What's the benefit overall?
Pay less tax.
Yeah. Okay.
So basically how they calculate your tax is they look at all the income that's coming in from your clients, and then there's all these deductions that you are legally allowed to claim, business deductions. And once you know what they are, they will go to reducing your income, taxable income, and then whatever that taxable income figure is, you get taxed at a certain percentage on that. So the goal is to have as many legal tax deductions as possible to pay the least amount of tax.
So in an example where like an F45 gym that's doing well, they might have like $500,000 worth of like annual revenue. If they can demonstrate that there's car signage and computers and clothing, there might be like $100,000 or something of expenses directly related to work. They're only really going to be paying tax on $400,000 of the $500,000.
Yeah, correct. And if you sort of, know exactly what to claim, bundle some things like your car and in there, then you can just keep reducing your taxable income and reduce your tax payable.
So, guys, I'm hoping you got questions specific to your gym, because you've got an accountant in front of you today, and we're really fortunate to have Michelle here. The other thing I'd note here is that she's specific to the fitness industry. And I have a range of different accountants over the years, and some of them, it's kind of me educating them, or I have to sit down and say, hey, my friend's a gym owner claimed this. Could we do that? And they go, oh, maybe. Whereas I actually want them, like, hey, have we claimed this? Have you claimed this? So get your pen out, guys. I'm hoping this is pretty useful. What's the next topic you've got there?
Yeah, just keep running through tax deductions.
Yeah, computers, technology.
Yeah, so one common thing I don't see people put through is their personal phone. We use our personal phones so much for business, same with like home internet and things like that. Work clothing is another interesting one that I often get. So you can claim anything with like your business logo on it, but you can't claim things like Lululemon pants or like just general gym gear. Even runners, you're not able to put through. So that's one that people do get sort of caught up on sometimes. But we can, if we're training clients outside, or if we just want to say that we're training clients outside, we can claim things like sunglasses, hats, sun cream, because they're all considered like safety related. So a pair of sunglasses can be a few $100s. That's usually a really good one as well.
So from a practical point of view, I've got my business credit card. I go to get a hat, my sunglasses at Westfield. I pay for it with my business credit card, keep the receipt, and then I'm loading it into QuickBooks or Xero or something like that, so I can get a tax deduction at tax time.
Yeah, 100%.
I've definitely been trying to do shoes. That's one that
It's literally written there, runners, like as an exception that you can't claim it.
Hey, you use the example of Lululemon outfit. If I buy a Lululemon shirt and put a Rush Cutters Health logo on it, is that then a tax deduction?
Yeah, it is 100%. Yep.
I know Matt Mazzaferro's got these great Nike shirts, and then he's which you can just go and get from Rebel or something. They're always in stock. You don't have to sort of order 50 of them to get a decent rate sort of thing. So he just goes and gets 2 for that staff member, 2, puts the logo on, and then it's a tax deduction. That's cool. What else have we got on your list?
Business mentorship. So this is under training. You've got business mentorships, training, anything that relates to growing your revenue in your business. It needs to relate to the job that you're currently doing as well. So if you were to go out and do a physio degree, for example, that wouldn't be deductible because a physio is different to a personal trainer. But it could be, skills like strength training courses or kettlebells courses, but then it could also be more soft skills, like learning how to market or communication or leadership skills, even like books that you buy or like audio books on these topics. You can claim all of that sort of stuff because it relates to making you a better business owner and increasing your income in the long run. And then you can claim like travel to all of these things as well. So, Steve, when you do like events up in Sydney, if I was to travel to New South Wales to do those, that would be deductible for me as well because I'm going there for a training purpose.
Yeah. I know every time I've been to the Gold Coast, we flew to Japan last year. I went and visited a gym while I was there for that reason. So very good. There's a question here from Matt. What's a better tax deduction, business mentorship or advertising? I'm imagining they're both good, aren't they? Like we can claim both.
Yeah, they're both great from the perspective that you can claim 100% of both of those expenses. It's not like you can only claim a portion. I'd probably more talk about or look at it in terms of the benefit of it. So business mentorship to make you a better leader, make you better at certain areas. I think that's always a really great use of money. And then obviously advertising, if used correctly and your return on investment on that advertising is also a great use of cash flow.
Yeah, that's good. Guys, as Gym Hub members, you obviously want to be claiming that as a mentoring expense or as a coaching expense if your staff, if you're doing like precision nutrition or Michelle said like a kettlebell course or breathing and ice bars or things like that. The Audible is something I was listening to this morning. How would I go with something like Netflix? If there's something business related on there, can I claim that type of stuff?
I have had people talk about this one before. So usually I'd say that it's pretty on the line. If you were to get an audit, I mean, you can put anything through your accounts. It's more if you were to get an audit, would the ATO let it pass? I would think that it's a pretty high chance that it would not get through, purely because there's so much content out there on Netflix that is personal related. And I guess it would be, if you were to look through your history on what you'd seen, how much of that would be business related. I do have a client for their role. They're not in the fitness industry, but for their role, they do need to keep up with current events and news and stuff, and they do actually claim that subscription. But I guess unless you're just watching a lot of like fitness docos and stuff, we wouldn't claim 100% of that for you.
Yeah. Like the cars, it sounds like if you're going to submit it, have a bit of a plan behind how you justify it. The car expense for me is a pretty expensive one. So it feels like it justifies the effort required to try and make it work. $10 a month for Netflix, if it's on the line, I don't know if I'll even bother. So that definitely helps. There's a question there from George, which we might get to shortly because it's on a slightly different topic. In terms of other stuff we can claim on, what else do you have?
Yeah, obviously equipment is a huge one. whatever equipment you're purchasing for your gym, you can definitely claim 100% of that. Entertainment's a really interesting one, and one that a lot of people get really confused about, because when, for example, if you take your client out for a coffee, that's often considered entertainment and not tax deductible. But if you bring that coffee back to your studio and sit and have a meeting with a client, that is tax deductible. It's considered more of a meeting. Just understanding that line around what you can and can't claim for entertainment. And again, it's around business generation and things like that.
Is there any advantage to logging them as, client meetings, for retention and that type of stuff if you're out for a lunch, as opposed to, a staff lunch or something like that?
Definitely. So it's always better to have it as like a client retention, or we do like quarterly check-ins with clients and stuff like that. However, if you're out for lunch, the tax office will deny it anyway. You're much better off saying that it was a takeaway and you brought it back to the studio.
Yeah, okay. Would you list that under like internal catering or something?
Yeah, or just like client meetings.
Okay. Matt's just asked, how would you log something like client retention into Xero? Are you just sort of making notes as you sort of load them in?
Yeah, so the way Xero works, you'll have lots of different account codes, and you'll probably have an account code called client meetings. And then so when you're going to reconcile your transactions, you would move that to client meetings. You may want to pop in the notes there that it was for client retention, just for your accountant's sake, so they don't question you about it. But otherwise, if you move it to client meeting, it should make a fair bit of sense.
It's been my understanding, and correct me if I've sort of misunderstood, but you're not getting in trouble for submitting things. Like they can obviously say no if it doesn't qualify for a tax deduction or something like that. It's kind of in our best interest just to submit things and put notes on it, give it to your bookkeeper and see. Because there's got to be some things where they go, no, that doesn't, the joggers, that doesn't count. But if we just get into that sort of regular habit of trying to keep like receipts and actually give an explanation of how it is retention related, we sort of give our bookkeeper or our accountant the best chance.
Yeah, absolutely. I say that to a lot of my clients. If you don't know, just include it, because it can't hurt. Like, I'll pick it up, and if it's not deductible, I won't include it for you. But at least you're not losing a deduction. And sometimes I'll talk with people and they had no idea something was claimable, and they've, been spending money on it for the last few years and they've just lost that deduction. So I definitely include it, and or even email your accountant and just ask them whether you can claim it before you purchase it. And it's a simple, really yes/no answer.
Guys that are following along, Matt, Josh, I really encourage you, George, Alec, Jagger, go into the chat and start listing a few things that you're thinking is a good idea to start claiming, just so we can reduce the amount of tax payable for you this year. Obviously, we've got Michelle's expertise here that can sort of give us a bit of a direction or oversee some of that as well. Things that came to mind for us, we actually just bought a treadmill. We've just ordered some uniforms. We've had ads last week on Facebook. I'm always, paying for some type of coaching or business course or something like that. I've put a line through the shoes. I've been submitting that one often. But this is helpful because the more things I get on my list, the more I guess the more we get to keep. While they're sort of scribbling down a few that they want to claim on, others you might recommend or suggest?
Yeah, I'll quickly dash past these ones because these are pretty common ones.
Yep.
But there's a couple that I can think of that sometimes people aren't aware of.
Yep.
There's this one here, home office. The rules are just starting to change around that, but we can claim a deduction if you're working from home, which a lot of gym owners are, you can claim a deduction for the hours that you work from home. And you just need to keep like a rough record of how many hours per week you're doing from home. And then we just claim a certain amount of cents per hour. So that's a really good one that people sometimes don't know about. People often know about like your professional indemnity insurance, but they may not know about income protection insurance. So if you take out income protection insurance, sometimes you might take it out in your own name, and you can claim that as a deduction as well. And then this one here is another really big one, and one that you can probably cross the line with sometimes. It's member gifts. So anything that you purchase to try and, again, keep retention, keep clients, build relationships with clients, giving them gifts are tax deductible. So this is a really good one, and this can, depending on the relationship of your client, I've seen a lot of PTs spend quite a bit of money on this stuff. If you've got a general rule, so for example, for PT client birthdays, we get them a present, we can claim all of that stuff.
Yeah, that's good. So if I buy a bunch of flowers for a member, if it's deemed as a way of sort of keeping that member interested and around, that's covered.
Yeah, definitely. So that could be a potential really good one for people. The only time it's not deductible is if they consider it personal, and the example they give in the tax law is if you were to buy like a $500 bracelet and it's for your sister or something, and you don't do it for any of your other clients, it's just that person. That's when they would sort of figure that you've crossed the line on that one.
Yeah, it makes sense. Yeah, and sometimes I've made an error where I've actually put stuff on my business credit card, and I just have to point out to the bookkeeper and say, my daughter's swimming lessons. That one's personal. But there's obviously things you sometimes got to straighten out. There's a question there. If we sponsor like a surf club or a rugby team or something like that, is that claimable as well?
Yeah, absolutely. It depends on what you get for that sponsorship, but in most situations it is deductible. In most situations you might get some signage up or visibility in like their newsletter and things like that. And in that case you do get to claim it. Where sponsorship can turn a bit murky is where, for example, you have a corporate golf membership and you pay $5,000, $10,000 for that sponsorship, and in return you get tickets to play on their course and stuff.
Sure. Okay. We've just donated, I think, $2,300 to the Children's Cancer Institute. I'm assuming charity donations are tax deductible.
Yeah, so as long as they're, it's called a deductible gift recipient. So as long as they're registered as one of them, which most reputable charities are, then you definitely claim that as a tax deduction as well.
Yeah, okay. Very cool.
And that could also be like an advertising situation, like you could get like member events and stuff to donate to that charity and do videos and all that sort of thing to promote it. And so that donation can also form part of advertising as well.
Yeah, look, that's something we've done in the past where the person comes in from the charity, we get a photo with the team, we might even get, it costs like $100 to get a novelty check designed, and we get a photo. And I find members like to be part of something bigger than just kind of exercise. They like that sort of goodwill, and there's probably heaps of gyms that have a similar facilities to us and like do a similar service. But I love the charity one as a way of kind of differentiating. So it's kind of cool that it's a tax deductible as well. I'll just say, guys, there's obviously some of these things that are a bit sketchy. There's some that are just like easy to actually claim on. So many of them are easy to claim on. So that's kind of the main objective today with picking Michelle's brain, is I just want you to look through all the things you're already paying for that with proper receipts and proper sort of entries into Xero, you could actually claim as a tax deduction from now on. None of what we're talking about today is how can we trick the ATO. Now, nothing we're trying to do is like, how do we take an unfair percentage or how do we skip paying tax? But instead, how do we just claim the things that are tax deductible so that you can, pay a bit more in wages or take a holiday or something with profits at the end of the year?
Yeah. Another really good one, Steve, that I've got here is superannuation. As like business owners, we don't have to pay ourselves superannuation, and often that can get us into a fair bit of trouble in retirement. We don't have super balances. Paying yourself superannuation up to a certain amount is tax deductible as well. So if your business is earning good profits and you're wanting to reduce your tax, paying yourself up to the maximum amount per year, which is like $27,000, could be a really good way to claim a tax deduction there as well.
Yeah, that's good. This list is really helpful. I'll definitely grab it off you at the end of the call and share it with the guys if you can. Yeah,
more than happy to share it and for people to sort of have a look through in a bit more detail in their own time, definitely. And then, we're just finishing off around motor vehicle, which I think we sort of touched on at the start, really. There's two main ways to claim motor vehicle. You can, if you want to claim all the expenses, like your car and the fuel and the insurance, then you can keep a logbook for 12 weeks and claim whatever business use percentage you've got. But even if you don't want to do that, or often I find, say, someone who just has one gym drives from home to the gym in the morning and then from the gym to home at night, it's just not worth them doing a logbook because they're going to get a percentage of like 5%, and 5% of fuel and things isn't really that much. So what I encourage then is there's this other method that you can use, which is called the cents per kilometre method. You can claim up to 5,000 kilometres and you don't need like any proof or any record. It's just like a rough diary of where you've travelled, and you can claim those kilometres and you get a certain amount of cents per kilometre. That works out to be a $3,900 tax deduction for like no work. So that's if you're not going to do a logbook or you don't have a high business travelling cost, that's a really good tax deduction that you can utilise.
That is absolute gold. So good. I'm assuming, are we at the bottom of that?
We
document?
Are.
Yep. Very cool. Guys, I've just put a little prompt in there. If you've got a tax-related question, speak up, pop your microphone on. It could relate specifically to your gym. I'm curious to know, what you're sort of thinking about. I know there was a question a minute ago from one of our Georges. He was saying, as a sole trader, tax-wise, is there any sort of benefit to set up or employ subcontractors versus employees?
That is such a good question and one where the law is changing. So I say it's a really good question because so many people are getting caught out on that one. So it is becoming harder and harder to employ people as subcontractors compared to employees. The ATO and government are wanting us to more move that towards employees. So it's probably one that I'd need to talk like specifically to a person about around their circumstances and all that sort of thing. But basically, if you are providing like the tools, so like the equipment, a person is coming to do a job, so as opposed to like get a result. So like, for example, if you were to pay someone $500 to get client A to lose 10 kilos, and then after they lose 10 kilos, they can get their money, then they would fall very much into a subcontractor. But if you're paying them an hourly rate or to take a certain amount of sessions, and they're using your equipment, you're really dancing on the line of being an employee, even if they have in the past been employed as a subcontractor. And where that can get a business into trouble is you often don't pay subcontractors superannuation. And so this person can come back down the track and be like, yeah, cool, you paid me a wage, thanks. But actually I was technically an employee. You owe me 11% superannuation. So that's why that's a really good question, and one that, people should definitely look into if they've got subcontractors.
Guys, in today's session, I'll make sure to share Michelle's details with you. I know some of you have particular needs that are sort of quite unique. So George Cormack, as an example, you might want to reach out to Michelle, sort of explain a little bit more about your situation and see what suits you. I know personally, we're actually set up as a company. I feel like there's some nice sort of tax advantages to being set up as a company versus a sole trader. And 100% of my staff are paid as employees, so we're paying super. It's good to know that they're trying to move everyone that way, because it's obviously going to make it more difficult to keep the subcontractor thing going, even if we wanted to.
Yeah, it's a big movement in the Pilates industry at the moment, actually, and it'd be interesting to see if it funnels its way into gyms as well, starting, because they're all hired as subcontractors, but there's a few tax office cases now to try and that will probably come through and move them to employees. So definitely an area to look at.
Yeah, it felt like COVID. Like the government with COVID was really trying to encourage business owners to not only keep staff despite, a loss in revenue, but to also provide some stability for them. We actually took some of our staff from casual over to part-time, permanent part-time, because of the benefits like associated with training and rebates and things like that. So I can definitely feel that push as well, and that benefit towards, that's what they want us to do. So there's little incentives there.
Yep.
George just asked a question: if we charge the subcontractor a rent, is that safer?
Yes. So then that would be a different model. But I assume if you're charging rent, then they will receive the income from the client directly. In that case, yes, that's a completely different relationship to someone, say, coming in and getting paid $60 for a class. And so they, invoice you at the end of the week. I did 10 classes and you pay them $60. That's what I was talking about in terms of that line between subcontractor and employee. But where the gym is charging them rent, they have their own clients, they receive income from the clients, and they pay you rent each week, that's completely fine. That's a very different model. So
good questions, George. You're doing well. Guys, if you've got other questions, pop them in the chat as we go along. Michelle, what other sort of things do you think is useful for a gym owner or gym manager to be aware of when it comes to accounting and financials?
Yeah, I popped a couple of other topics on here, and happy to sort of put it out to your audience in terms of what they might sort of want to know a bit more about. One was around transforming their numbers into smart business decisions. So firstly, how to read a profit and loss statement, what it is, what it means, and then how to see those numbers and make decisions on that for the fitness industry. So understanding what certain levels of expenses should be and things like that. Then I can also have a chat around the various types of taxes and what they are, like GST, pay-as-you-go withholding, tax installments, income tax. I think
that'd be really helpful, just to have a better understanding of what the difference is. I just got I think 48 grand or something yesterday that I've got to pay, and it's a mixture of those things.
Yeah.
What would you like to start on? What's a term that we should be aware of that's going to hit us all every quarter?
GST would definitely hit you every quarter. And I think people get a bit confused over, I'm paying GST, I'm paying income tax. Like, what's the difference and why am I paying these two amounts? Basically, GST is a tax that every business has to pay, or not every business, but every fitness business definitely, once they are earning revenue of more than $75,000 a year. And that's revenue, not profit. So that's the money coming in from your clients. It's not after expenses. Once that happens, you need to pay 10% of your revenue to the tax office, and you can claim 10% of certain expenses in GST as a deduction as well. So that might be rent that you pay to your landlord, electricity, all that sort of thing has GST on it. But then there's certain things like wages, bank fees that don't have GST on it. And then every quarter we lodge what's called a BAS, a business activity statement. And that basically tells the ATO what your income was, what your expenses were, and then how much you owe them.
Yeah. And I remember, I think my first gym we opened like 2007. I don't think BAS was a thing back then. I remember you'd get to the end of the year and you'd get this horrible notification, because instead of doing it quarterly, I think I was doing it annually.
Annually, yeah.
You'd get like a massive kick in the nuts, like, hey, all of this stuff's due. And if you hadn't been putting money aside, it could sort of leave you like, struggling.
Yep. Yeah, definitely. Now most people will need to be on quarterlies. So at least that sort of manages the payments, but you should definitely have a chat with your accountant, because even at the end of the quarter, you should be putting money aside like weekly or monthly for your GST. It's really easy. Xero like downloads a report that will tell you exactly how much to put aside. So you shouldn't be getting a surprise at the end of the quarter. Hopefully, if you've got your accounts, like your bank account structured and do certain transfers every week, you should be transferring a certain amount every week to that account. So then when your accountant says you've got to pay 20 grand this quarter, you just take it straight out of the account you've been moving it to every week anyway.
Yeah, that's really helpful. So we've looked at GST, so 10% of the revenue that we take, we've got to pay in GST. We've had a look at BAS, which is checking in every quarter and making sure we make a contribution there. I'm assuming BAS is sort of calculated off kind of what you did last quarter, or is it sort of adjusted every quarter?
There's two ways you can do it. So you can pick a nominated amount based on what you'd done the previous year, or you can do it based on what actually happened. All of my clients are on that second option, where you download a report from Xero which tells you exactly the GST on your sales, exactly the GST on your purchases, and then you put in the actual number in there.
Yep. Yeah, okay. Income tax, anything we should understand about it?
Yeah, it's a completely different tax to GST. So basically, let's say you earned, let's talk small numbers. Let's say you earned $1,100 from clients during the year. $100 of that would go in GST, and then $1,000 would be in terms of income tax, your income. So you're not double paying tax on the same amount. That $100 that went to GST doesn't then also get added to your income tax. So you're not getting double taxed.
So GST first, and then the remainder of what's left is then what you're taxed on. So of that $1,000, there's a percentage of tax we'll pay. I guess that varies based on how much you're earning and what structure you have set up.
Yeah, so that's where entity structure is so important. Sole traders get taxed based on how much they earn. So if you're earning like $20,000 a year, you don't pay tax at all. And then it slowly starts scaling more and more up into like 45% in tax. Whereas a company, that just gets capped at 25%. So if you're only earning $20,000, you've still got to pay 25% tax. So you don't want to be in a company if you're earning 20 grand. But as you hit a higher level, like 100, 120 grand in profit, that's when having a company starts to become quite tax advantageous.
Yeah. And if someone's on the call or perhaps watching the replay later, they might have set themselves up as a sole trader. They might be kind of underway, making a bit of money. Is it all sort of too little, too late to switch to a company, or could it still be worthwhile having a chat around maybe a switch?
Yeah, it's definitely not too late. You can definitely move your business at any time into a company or a trust as well. There's different advantages of having them in those structures depending on a lot of things like family and all that sort of thing. So it's definitely worth having a chat. The process can be made really simple. Your accountant can set all of that up for you. So you just give some really easy information, and we can set it up. And yeah, you can move your business really easily into a company.
Yeah, very good. George Saragas, I noticed you just logged back in. I hope your little interview with a staff member on the phone went well. I know you had a question for Michelle. I'm not sure if it was relating to tax deductions or more so around, managing people, having 2 gyms, an accountancy business. Do you want to pop your camera on and fire away if you've got a question?
Hey, Steve, I'm unable. Here we go. Start the video. Here we go. Perfect. Hey, Michelle.
Hey, George, how are you going?
Good, thank you. How are you?
Yeah, good.
All right. So, tax point of view, it's okay at the moment. I've got an accountant that does all the bookkeeping and all that, and we've just got a list of everything which we claim back. So I'm very, very clear on that one, what I can't, which you have just clarified everything for me, which is what I do now. Perfect. It's just the role. I just got off a call to actually someone who looks like he's the top of the list at the moment, where I've got an interview with him tomorrow at 8:30. Now, moving forward with my role. And I've always been the guy, as I've mentioned this at Steve at the start, I'm always the one that wants to stay in control of it all. And I've always been a warrior of delegating, thinking, no, I'm going to take it back myself. So I'm always been working in the business so hard, and this goes back for over 2 decades worth, where now it's to the point where I'm thinking, no, I've really got to let loose here and delegate my time. So what's your main roles in terms of building the brand without and delegating stuff and managing it well and taking time back?
Yeah. Really good question. I think so many people would be in such a similar boat where you want to control everything, but also that when you delegate, mistakes come back, or it's only done at like 50% or 80% of capacity of what you would normally do it at. And so then you end up taking it back. I think there were 2 things that's really helped me let go of a lot of that, because my gyms were definitely my babies, and I, didn't want to let go of a lot of that. Number 1 was making sure that I think I was prepared before I delegated. So I had documented systems of exactly how to do everything. So the person who was taking it on, it wasn't just, here, can you do a social media post for me? It was really outlining exactly what I wanted them to do. And I think when they didn't do it right, rather than thinking they haven't done it right, I kind of turned it back on myself, and I was like, okay, what could I have explained differently, or how could have I trained them differently so they could have done it right? And then when I realized that actually, like, that was quite empowering, it was suddenly actually there's things that I can do to make them get that task more than 50% done correctly. And then as I worked on that skill in terms of, I think, communicating what I wanted them to do, and even if they didn't get it right, showing them what wasn't right about it and how I would have done it in the future, that really helped.
So outlining the systems is the basis of this.
Yeah, definitely.
In detail, yeah.
I think that's what Gym Hub really taught me as well, like systems. And there's nothing too detailed. I think, Steve, you might have said in one of your trainings once, it was like, even if you're writing opening procedures for a staff member, turn on the music. that's not even enough. How loud do you want the music? What channel do you want it on? Like, what songs do you want to play at 6 a.m. compared to 5 p.m.? Like, really delving into exactly what you want. Otherwise, like, I would have staff, I'd come in and the music was way too soft, or it was just open gym and the music was like blaring too loud. And it was like, oh, okay, I need to write that in so they know that.
Very good.
Yeah, it's good. Guys, if you're sort of taking notes, you might be interested in, is there some roles that you could actually, that you do currently, that you could pass on so that you could free up some time for your own training, for family, to take on another business, whatever you sort of want to do with it. Michelle was doing it herself is an important part. Remember, when you systemize something that Michelle did, it's going to copy it. So we want to make sure that the thing she was doing, if it was her technique for booking in a phone inquiry, that's what you're duplicating. So you're obviously not only doing it, but make sure it's successful. I feel like that I spoke about the 3 steps before: do, we, and then you. So you do it as a group. So we, and then you hand it to them. I just think it's really, really important that you actually have best practice in the thing you're going to delegate. Put it down on paper. And I love that, Michelle. If it doesn't go well, have a quick look in the mirror and go, well, what did I actually miss in delegating that? What step didn't I list in terms of the volume of the music, or putting the lights on at the same time, turning on the computers, tallying up the cash register? What wasn't on there? I can't really get mad at them if I didn't give them all the details. I actually find, Michelle, that my staff are just having a crack. They're just literally doing their best.
Yeah.
And if I don't tell them where I want the music at, they're just going to try and interpret it and go, oh, yeah, that kind of sounds like when Steve does it, which is the best they could actually do. And I like that they're sort of proactive in that regard. But yeah, George, you've got some pretty particular systems. You're obviously really big on quality control, which has been part of your reluctance to let it go. But no one has a franchise that's doing it all themselves. So it's an important first step.
I also heard a really cool quote a while ago that made a lot of sense to me, in terms of, whenever you give a task out, that person will never do it at 100%. Like, if you do it at 100%, you might get it back at 80%. And the quote was basically, you as a person only have 100% capacity, right? So if you do this one task at 100%, that's you done. But if you give out a task to a staff member and they do it at 80%, and then you do another task at 100%, you've just got 180% capacity done for that day. Yes, it was only done at 80%, their task, but you still did 180% compared to only 100%, which you could have done yourself. And that made a lot of sense to me. Like, if you want to grow, then you're going to get the biggest percentage of tasks done by delegating, even if it gets done at 50% or 80%.
I love it. Yeah.
I don't know where I heard that quote, but I really liked it.
And yeah, if my expectations aren't ruthless, if I'm not expecting them to treat it like they've got the business loan and that their livelihood and family's future is all on the line, maybe 80% is more realistic in terms of their execution. But yeah, I've got 10 staff in there that could easily do it at 80% as good or as hard as what we do. That's 800%. It's better than I would have done on my own working in there 12 hours today. So I love that. Good question. Any follow-up questions, George?
No, that's pretty, like, I've got, as getting ready all the documents for potential franchisees, they're all the operations manuals done in absolute detail to the point of 500 pages worth. But I've got to detail it even more, as we're talking about, like the music's done, for instance, but now how loud, what channels. And so I've just got to go back and look at how much detail is really in there, because as soon, like you say, I'm a big believer in, if someone's done it wrong, well, I'm going to blame myself for that because I haven't detailed it properly. So I've got to go back and look at that and make sure it's spelt out in very clear ABC format for everyone.
And I think sometimes as business owners, we operate on a completely different level.
Yeah.
And so sometimes I know I sometimes feel like, oh my God, I'm really just giving you this like checklist of like stupid little things, but I've never had someone be disappointed by that. They're like, no, because now I know exactly what you want, and things that you might see as normal or natural or just intuitive, that's not how they see it. So it does really help.
Is that a checklist each week, or is that just a base checklist as a whole role?
We've got a lot of different checklists, but we've got like an opening procedures checklist. We've got a checklist if the staff have a break between sessions, if someone's cancelled, there's like a checklist of things that they can go and just do, like things that need to get done around the gym. There's quite a few that we give to them, but also around their role and things that they need to do each week. Especially the managers all have like weekly to do, weekly, monthly, fortnightly to-dos.
Yeah, beautiful.
I love it. If I was opening a gym tomorrow and I didn't have any systems, I would just start somewhere. And I think it's quite daunting thing, like, wow, I've got to create a HR folder or workbook for the 20 people that come in, and that's pretty daunting. So with my second gym, the day that we opened, I literally just went into a Google folder. I wrote SOP, standard operating procedure. You might call it checklist, George. And then I just started to actually create them. So I think my first one was cleaning. And it was basically a checklist for when the cleaner who comes in a couple of times per week, what do they have to do? So I'd have, wipe the mirrors, I'd have vacuum the floors, wash the tiles, refill the toilet rolls. And I just went boom, boom, boom. And I actually put like a little yes, no checklist next to it. So they come in, the first couple of cleans, I'm actually there watching them. I go, no, what I mean with the mirrors is this, because they've never actually seen what I actually wanted. Once they know, they should be able to come in, because they're cleaning 20 other businesses. They should be able to come back in and go, what did they need me to do? What was the 5th thing? What was the 10th thing on the list? That's too hard. So they go straight back to the checklist and they go, all right, wipe down the A-frame, tick, and they go tick, tick, tick. They get to the end of it and they sign it off. Then I created a procedure for opening the gym. The first person in the gym, turn on the air conditioning, turn on the computers, open the doors, put some equipment out on the grass, and there's a checklist. Onboarding a new member, sending them a welcome email, allocating their times with a trainer. And all of those in my head were just going to be the first draft. It was just like blurted all out, like vomited onto a piece of paper. Only when you actually start to go and do it, you'll realize, oh, I forgot something in there, and you'll tweak it. But I would definitely come up with, Studio Open steps 1.0, and I would get that actually into that system as fast as you could, rather than sort of overthinking it. And don't create any folders until you're ready to actually data dump down on a piece of paper. Very good. Michelle, this has been really inspiring today. Congratulations, obviously, having the success in your first gym, the confidence in your manager to open a second one. You've got a young family. You've thought, oh, I'll find something else to do. You're back into your accounting sort of degree, which is amazing, and delivering bookkeeping and accounting sort of services. Before we let you dart off today, if any of the guys maybe don't have someone that specializes in bookkeeping or accounting for gyms and has questions, or potentially is interested in doing some stuff with you, is there some contact details? Is there some types of service offerings that you could sort of outline for us?
Yeah, absolutely. I guess I probably should have said this in the beginning, but obviously I own 2 gyms, but I'm also a qualified chartered accountant, tax agent, all that sort of thing, and have created a business, Accounting for Fitness, who does tax, bookkeeping, consulting for people in the fitness industry. So I'm not just a gym owner who knows a bit about accounting. I've been doing this for 15, 16 years now. And then, our goal is to, I think, bridge that gap between, there's a lot of fitness studio owners who experience a lot of financial overwhelm. There's a lot of accountants who don't understand the fitness industry and who talk a completely different language to those in the fitness industry. And my goal is to bridge that gap and educate you on the financials, so you feel a little bit more in control on that stuff, but then also take a lot of that stuff off your plate, so you don't need to worry about the bookkeeping, the tax, when things are due, creating accounts so the money's already there, you're not paying these large bills and all that sort of thing.
Yeah, I love that you're proactive in sort of, bringing to our attention stuff that we can claim on. I also love that, we're not flirting with danger by potentially claiming the wrong thing and getting in trouble with the ATO.
Yeah, I'm always, I say to people, I don't work for the ATO. So tell me what you're thinking about claiming, and I'll always give you an upfront, honest sort of where your risk lies and things like that. But I'm always on your side, and we'll try and work with you to minimize your tax as much as possible.
Yeah, it's good. I know you do like some bookkeeping, some accounting. You've got like a couple of different service levels and stuff that you offer.
Yeah.
I'm not sure if you've got time to share any of that on screen, or I can share it with the guys, or both. Yeah,
I'll just grab it up here and show you just some of the main packages that we do offer. We try and go from, super detailed, where we literally do everything for you, to where you can sort of do some yourself if that's more where you sit.
Guys, the benefit of this is everyone should obviously have someone advising them in this sort of area. This could give you a better understanding of whether you're getting looked after with your current services or accounting professional. If you're a little bit stuck, you might also want to reach out to Michelle afterwards. No obligation, but these are the sort of things she does if you're interested. Yeah, thanks, Steve. So this one, our virtual CFO package, that is like the gold standard. Like literally you will not need to do anything to do with finances in your business. So we do all of your bookkeeping for you. We save all of your invoices. So if you don't even want to scan and save them and do that, we pay all the bills for you. So if your rent is due monthly, you don't need to stress about whether you're paying that on time and all that sort of thing. We organize all of those payments for you. We reconcile or do your accounts receivable and payables. So if you've got clients who are owing you money, we organise all that for you. If there's outstanding payments, again, we organise that for you. We do payroll fortnightly for you. Superannuation. So we touched on super before, that those rules can be quite tricky. We run through all of that and do that quarterly for you. Work cover. We look at all your contracts for your staff. We make sure that they're legal, they're at award rates and structured correctly, so you won't get sued by them. We touch base every couple of months to run through your accounts, because I very much believe in, as a business owner, it's important for you to have a base level understanding of what's going on financially with your business, but we do all the explaining for you. So you're not trying to calculate things or anything. We're like, okay, here it is. This is what the numbers mean. These are some options, and then we work with you through your questions. Yeah, I love that. I pay a fair bit in accounting, but I've been paying bills today. It's just an interruption to the other stuff I'm doing. You sort of get in a bit of a flow, and then I'm like, oh shit, I got to pay for those uniforms, and I sort of just get a bit distracted. So that's kind of the gold standard. That includes me doing a lot less if I'm doing that one. Yeah. What's that one worth?
So that one, and we do your BAS and your year-end tax return and all that sort of thing as well, by the way. That's $793 a month, and it is literally, you've got literally a virtual CFO. So that is one big role completely out of your company. If you were to hire someone to do that, that's sort of like a 70, 80 grand a year sort of role. So, yeah.
It's good. What's the next level down?
Yeah, so the next level includes everything that I just spoke about, except for the saving of your invoices and the paying of your bills. So if you're like, I know how to save, and we can show you. I know how to save something in Xero, and I'm happy to jump on and pay my bills when they're due. It's $200 a month cheaper, but we still do absolutely everything else for you. So all your payroll, your tax return, your bookkeeping, monthly meetings, all that sort of thing.
It's good.
And then again, downgrade if you think that I don't need to touch base every couple of months with an accountant. I'm sort of happy with you doing all my bookkeeping and stuff like that, but don't really want to talk to you until the end of the year or when something's due. That's the next package down. So that's bookkeeping and compliance. So we'll do all your tax, all your bookkeeping. If you've got any questions, you can always come to us, and we include that in the charge, so you don't get any extra fees at the end of the day. But yeah, we'll do all that, the compliance stuff that you need to do.
It's good. I love that you're working in fitness. Like all your clients are gyms and in the fitness industry. I like that there's different levels of entry based on what the gym owner's comfortable sort of doing themselves and what they want help with. That's so good. With your permission, I'll share that document. I'll also share the document with a list of all the stuff you said they could sort of claim in it. If it's all right with you, just give them permission to kind of reach out to you if they have sort of questions or clarifications. But it's been amazing. You're a weapon. I thank you so much for all your help and insight. It's definitely I've been scribbling down notes here to sort of there's a bunch of stuff I want to check.
No, thanks for having me, Steve, and thanks definitely for teaching me pretty much everything I know around systems and how to run a gym, because I think if it wasn't for yourself and Gym Hub, I'd probably still be working 60 hours a week in my gym. So very much appreciate it.
Very generous. I appreciate the strong feedback, and you're obviously a hard worker and someone that implements, at a fast rate. So you deserve all your success. I feel like I've literally just scratched the surface today. So with your permission, I might get you in a headlock and ask if you can come back, and we'll continue the conversation later.
Yeah, 100%. Would love to. Thank you.
So good. Well, thanks again. I appreciate all your time today. Let's talk real soon.
Awesome. Thanks, guys.
Thanks, guys. See you soon.